Yeah, before I really look at the prognosis for the earnings season coming up for our healthcare names, I really want to first highlight kind of key thematics in the space, kind of run to kind of their short and near term, longer term sector performance, kind of look at earnings growth, both in the context of what looks good and what doesn't look so good, and obviously remind everyone of our key sector picks. So obviously let's start with, we back up a slide, Scott, sorry. If you take a kind of 60,000 foot view of our space, 25 names across our universe, really bucketed, as Scotty and I like to say, into 4 key verticals. You have the biotechnology, obviously vertical, the medical devices, the services, and the facilities. Really quite different risk reward profiles. That's why we like to segregate those verticals, and I'm happy to talk offline about each of those in more depth. But lots and lots that's happening across our space, as you can expect. There always seems to be a lot going on. First thing is a lot of corporate activities. Obviously, we just had the $4 billion privatization of HealthScope. We'll probably see them in another 4 years hit the public market. But that was the latest kind of thing. A lot of M&A activity in the space. We do have the Royal Commission ongoing, as everyone knows, into the aged care space, and I put up the interim report is due at the end of this year in October, and then we had the final report back in April. We have the coalitions, of course, surprise victory not that long ago to put a nice little fire under the tail of the health insurers, the private hospital operators, and of course some other service providers in the space. And needless to say, the falling US dollar, I can't believe it hit 67 cents. I got to take a lot more money out of the States and bring it back to Oz. Here, multi-year lows. You have bond yields in the U.S. hitting lows as well, under pressure. Now you have Trump coming out last week and kind of pushing more Chinese tariffs, over 300 billion of those right now coming through the market September 1st. That's putting more downward pressure on the U.S. dollar, and it's not helping the Aussie at all. So a lot of these are Oz earners. So that Aussie dollar falling against the USD is definitely a nice tailwind for the space. So what do we like? Obviously, in this chart, I did circle just the ones covered in red. Those are the names kind of our key picks in this space. These are mostly offshore earners, or actually all of them are, starting with ResMed and Sonic, and then we have Volpara rounding out in the smalls, and Nanosonic, and Scott will talk to the latter two in just a second quickly. I also highlighted in green for you that are really looking for pullbacks across those names. I mean, CSL, obviously a nice core portfolio holding, but it's just too exy right here. Core products are going really quite strongly, but looking for a pullback there. Ramsey, don't have to say anymore, largest private hospital operator here in this country, but just dealing with a lot of operating challenges. And of course, we have Medicus on that chart we put in. Really significant revenue growth there. Medical imaging volumes are growing, but looking for a better entry point there. Turning to the sector performance, it's really a bit of a mixed bag, I would say. The Fab 3 of the Cochlears and CSLs and ResMed really holding up the space. Also throw in Ramsey as well, coming off a low. 7.3 points outperformance over the year. It looks really quite good. I was contrasted against the aged care providers. As I said, the ongoing Royal Commission, not too helpful, putting a kind of downward pressure on regulatory risk across those names. You see them underperforming. Gains really in the last 6 months have held up quite well. That Fab 3 is still taking out investor interest, and nice to see that ResMed, our number one pick across the space, up 48% in the last 6 months. We had a 2Q sell-off, and of course people bought that up, as the healthcare team was talking about, and it was good to put up a nice Q3 and Q4 result, so increasing investor confidence there. But looking at the sector whole, and we put this chart up before on the right-hand side of the screen there. That's over a 10-year period against the broader market, and you can see the healthcare index has outperformed 80% of the time, really on the really strong sector fundamentals that are outlined as well. But I really believe that increased volatility is going to hit this space, and so it's really a stock picker's market. You really, in this space, have to be mindful of what you're paying for it. I mean, that chart on the left-hand side shows the absolute level of PE you're paying for it. So it's one standard deviation rich, mainly due to the nosebleed levels we're having with Cochlear and Sonic, trading 20% above their mean multiples. That's contrasted against, the Japaras and Monashes of the world that actually are trading 5 to 10% below their mean multiple, so upside in those names. So it's really contrasting in this sector. But I actually put on why are people looking at this space regardless, or almost a disconnect from the valuation. It's the right-hand side chart there. It's only one of a handful of sectors that actually is increasing its earnings. I know it's hard to believe that people look at earnings now in this market with everything so pricey, but yes, we're growing quite substantially above a lot of the other sectors. Just looking at the 3-year annual growth rates, compared to PE multiples across our space, because you can see the sector as an overall is putting up higher earnings growth, but it really is diverse when you look across all the different companies in this space. So you can see in the upper right quadrant, you have the Cochlears and CSLs actually have wings on them. They're probably going to be off the chart in a couple of weeks. It's just hard to really chase those up any higher. You contrast it against like the Japaras and Monashes that are not growing very well, but are actually under their PE multiples. But we really prefer the companies that obviously highlighted red oval. We have Ramsey and Sonic, look really good quality names for what earnings that they're putting out, over 5% growth. And ResMed is the only one putting up double-digit growth, and you're paying a multiple that looks reasonable on a 3-year view. So with that, let's turn to what we're here for. So really looking at the upcoming earnings season, we're not expecting a lot of risk going into the earnings season, because eerily we had no reports or very little reports coming out of the February earnings season, so nothing has really happened, which is quite interesting to us. But you look at where we're forecasting is going to be in line. We have about half a dozen names from pathology provider Sonic down to X-ray provider MicroX, look all in line coming into the year-end result. However, we have major swings and roundabouts always in this space. We always say, oh, it's pretty quiet, but as I said, eerily so. We have second half skews for all names, and of course, Forex, as I just mentioned, is kind of just this big swing factor. So we're looking who's going to look to beat, we think. I mean, I put up ResMed because I'll take that win. We locked that in last week. It did really quite well. The second quarter, they put up double-digit top and bottom line growth above market expectations. That thing's on a little rocket. Yes, you saw the multiples are quite high, but I would argue that it's a quasi-IT name, and deservedly so, and looks to put up double-digit growth for the next 3 years, as I pointed out. We do have the IVF players in that beat category. We have Monash and Virtus kind of looking to more stabilizing operating environments. Rounding out kind of the beat category coming into year end, we do have an aged care provider, Regis. Is this the bottom for Regis? Hard to say. A lot of this should have been priced in, but the market seems to be missing a little bit. So look for a little upside in Regis. And we also rounding out the smalls, we have EBOS and Sondamed. And on the miss category, we'd actually look at CSL. But I'll point out for these names, it's going to be interesting because a lot of it's not to do with a miss per se coming into year end, but it's the outlook statements. Obviously, the outlook is much more important than what they have already done. So when you look at our misses, you look at the Sonics, the Helios, aka that was primary. You have Ramsey in there, Ansel. All those, we kind of think that there's risk heading into fiscal 20 because consensus expectations are a little too lofty. Ansel, obviously, is an industrial name. I don't really, in this kind of trade war environment, want to be holding such a name as Ansel, and that's the only kind of industrial name across our space. I'll point that out. Medicus and Nanosonics round out those two in the miss category. Just running through our kind of key picks just briefly. ResMed, as I said, it's been our key pick for a while now. Still, touch wood, has been going quite strongly as a quasi kind of IT name, really strong, kind of coming up its Q4 result, up another 5 points layered in, really transitioning from a typical medical device provider to, as I said, an end-to-end cloud-based connected service provider, offering good growth. As I said, it's the only one across our sector that's putting up double-digit growth on a 3-year outlook, and the free cash flow to share yield is over 30%. Yield in these companies are neither here nor there. Yes, you look at the right-hand price PE multiple chart; it's lofty, but as I will argue, the business is not what it was 5 years ago. It's definitely in a transition stage. Sonic Healthcare, I do like this. It is trading at our price target, $28. I'm always one to put my hand up and say, listen, if it hits our price target, I'm taking some off the table here. But it's still a good global diagnostic play, good balance sheet, good defensive earnings. It's all about scale, and we're looking at high single-digit profitability going out the next 3 years, a 3% divvy yield. We have very well-known funding risks in this name as well, and you have a nice little Forex tailwind. So I think it's going to keep moving higher from here, and we'll see how it reports. I think it's going to be in line, as I said, come earnings. CSL, arguably one of the best class operators in our sector. It should be in everyone's portfolio. It's just, when do you get in this name? It's just, I hate to admit it right now, but I'm chasing this damn thing. It's XY as hell. I mean, look at that chart on the right, but you can argue it's no different than ResMed, but I think ResMed, as I said before, is changing its business model. CSL does have risk. Earnings growth is slowing, even though it's still growing. I'm just thinking, I just don't want to be chasing it here. I do see risks that it transitions more into this biotechy-like company with a lot more headwinds it's facing. So I think you'll get a chance perhaps to pick it up a little bit cheaper when it reports earnings. That's in next week. I think it's next Tuesday or Wednesday. Consensus expectations, we believe, is a bit tad in the high single digits. We're in the low single digits due to a revenue recognition change due to one of its products called albumin. Happy to talk that offline, but I think you're going to get a chance. Watch that closely on earnings day. We'll put out a note as fast as we can on that and get in front of that. Okay, next one I wanted to talk about is Ramsey. Really recovered nicely off of kind of its low trading range as people kind of thought the operating environment has changed, which I would argue it has not. Obviously, the coalition getting in, get a little light under its bum there to help push it up with the health insurers, and I would argue that it's actually overdone. I would be looking at this name. It's a good quality name, the largest hospital operator here in this country, but I just don't think you're going to pay that price multiple for it. Now, even though it's trading at a mean historical multiple or roughly around its mean multiple, I don't think it's reasonable given the challenges it's facing. $65 is where I'm looking to pick more or less Ramsey up. So now with that, I will turn it over to Scott, run through our key picks on the smalls, Volpara, Nanosonics, and Medicus. Scott?
Yeah, thanks, Derek. Just three names I want to draw your attention to. Volpara doesn't report this period given a different year end. What we are watching is the annual recurring revenue grow and also the average revenue per screen. So this is a pay per screen business. We like that business model. Currently around 90 cents per screen, given they've recently acquired a couple of businesses. And we're looking to grow that to over $8 over the next 4 to 5 years. So that'll be the key driver for Volpara. Nanosonics is one that really interested in, really like the story, high-level disinfection company. They've told the market that their second half cost base will be higher. So the second half numbers will be lower than what they achieved in the first half. I'm hoping that will provide a pullback for the stock where buyers around the $5 mark in Nanosonics. They've got a new product coming to market over the next 9 months. That's going to continue to deliver strong earnings growth. Finally, Medicus, again, with the entry into the ASX 200, the share price has been on an absolute tear. It's been well sought after because if you look at the EPS growth over the next 3 to 5 years, you're looking at around 40% per annum. So off a low base, growing very strongly. Also, their return on equity is above 30%. So what we're looking for at this reporting period is there will be some rebasing. Again, the accounting standards may just see the optics of the company look a little weaker than what the underlying business is. Again, if we can pick this up closer to the $25 mark, I mean, it's at 32 at the moment, so it sort of could be a bit of wishful thinking, but it is a very good quality business that we are looking to get into people's portfolio at a better entry point. But they're basically the three sort of emerging names we're looking